Good morning all, hope you're doing well and you're having a nice weekend as well. This is the COT data video for the 3rd of July 2023. We have to remember we've got the 4th of July, so the markets are going to be closed on Tuesday and there'll be an early close as well on Monday. We've got some PMI data from the US on Monday, so that's going to be the risk event tomorrow. Okay, so the euro, well, obviously we are strong. We can see we're very far above the zero line. They had decreased that volume and I just went a bit sideways, 144 to 145. I think the dollar is just going to do this for a while. It's just going to bide its time. It's going to strengthen ever so slowly, and inevitably we're going to get the sell on the euro USD. But it's going to take a long time before we got the two lines to cross. But I think it's quite telling we didn't go below the zero. It's almost like it's just lying in wait, like a crocodile almost, just waiting, and eventually it's going to spring and it's going to be quite strong. So that was quite important that we didn't breach the zero, and you'll see that the other currencies have actually breached the zero. So be careful, because inevitably we're going to get the sell, but it's going to take a while. Okay, yen is of note. Let's take, we can put the euro on. All right, let's just see where we are. 112, 110. 111. We breached it. Right, so be careful for yen because it's weak on the net non-coms now. Okay, this is what the banks and institutions and how they're positioned, and they're selling the yen quite heavily, and we breached the support. 111, 112. Right, so we actually at a very historic low. We have to go back a couple of years now. We can obviously, if you are a member of the Patreon, you can have access to this file, and then you can change your data range. Okay, so that's important. You can change your filters, right? And I've just got this filter on because this is the format of the videos that we've been doing. So I don't really want to be changing the times, but you guys can look back, I think a decade, right? So there is so much data here, but just for the purpose of this video, we're limited to January 2022, but you guys can go back many years if you wanted to, and I'm wary about changing the date and time for this video, but you can see how we're breaching that support. Okay, euro off, so note they were sideways. Aussie and tick up 61, 39. That's a big increase, and we are below zero, but that's quite an increase. And there's AJ buy. Okay, so because they sold the yen and then bought the Aussie. Admittedly, the Aussie did fall, but it's still stronger than the yen. You can see the big difference there, and we have the deviation. So therefore, the crossover deviation is the setup. Okay, for a buy for Aussie yen. And Aussie off, put on pound. Pound has been a bit roller coaster. We did fall a little bit on Friday, Thursday, Friday, but we had that House speech, didn't we? And sort of sent the USD strengthened a little bit, but there's certainly a buy on the net non-coms for GU. Okay, so they bought pound over the USD, and then there's a GJ buy here with the divergence of the two positions, and so that's the pound yen buy signal here back in January. So you would have done quite well. It's probably rallied God knows how many pips since, so we would have done quite well on that, and that's the pound. Okay, so we went from 46,000 to 51, nearly 52,000. So that is of note. So be careful about shorting the pound. It looks quite strong. And don't forget the Bank of England heights as well, quite aggressively. So that puts the pound in a good position. CAD, big surge. Wow, 33 minus 2,000. That's a big surge there. So we're probably going to breach the zero line, and we have certainly bucked that trend. We were on a downtrend for a while, and we really surged. So that's unusual. It might be to do with oil potentially, but keep an eye on CAD. Be careful about selling that. It's quite strong. We are below zero, but it looks like we're going to breach the zero by next week. Euro are done. Gold we'll look at. And gold is, we kind of want to be getting that support, 160, 151. Yeah, we're definitely below that support. So because we're below that, we'll probably have to target maybe this one, 142. Yeah, possibly something like that. Maybe that might come into play, and we'll bounce. We're looking left at supports and resistances essentially, and there was one here. Kind of coincides with that. So a little bit weak, a little bit, but we are obviously well above the zero line, but they are starting to sell it ever so slightly. It's 162,151. So yeah, it's kind of hard to say, isn't it? Really, a little bit choppy. We probably might need to come down a bit for a bounce. Gold off, and then New Zealand dollar. To sideways. Basically, we're just trapped, aren't we? Consolidating, and 8v1. I can't show you, but yeah, we're just basically just hovering on that zero line, aren't we? Just sideways for the Kiwi, and then lastly, Swiss franc. And likewise, it just follows that zero, doesn't it? Really, just tracking and hugging that line, and that's it. So be careful with the CAD and the pound. And I think gold might have to come down just to take some support, and yen is breaching support as well. And don't forget, this file is available for bulletin tier and above, but you have to subscribe to the patreon.com/QuasiDB. And don't forget, if you've got basic access, you won't get the spreadsheet, but if you go premium, then you will, and then you get access to our spreadsheet. So I'll quickly show you the scores if the thing loads, and this is how we're positioned currently. So you're looking to buy up here, and you're looking to sell down here, and so there's a little bit of Swiss strength here potentially, but be careful with the pound and the CAD and the yen. The pound and the CAD surged, but the yen dumped, so perhaps CAD yen or pound yen could be good longs. And that's it. So I'll wrap up now. Remember to trade safely. It's going to be a fairly quiet 48 hours. We've got the PMI from the US tomorrow. Then we've got a very quiet day on Tuesday. And then don't forget, we've got the NFP roller coaster on Friday. So I'll speak to you guys soon, and trade safely. If you were looking for an edge in your trading, I thoroughly recommend the fxsi.com website and their indicators. There are different plans that you can use. You can use one for 5 terminals with maximum history, or the 1 terminal. It's completely up to you. There's so much to it. To put it into an advert, just to encapsulate how amazing and powerful the indicators are, it's going to be very, very difficult. But essentially, the sentiment indicators are based around a thing called the order book, and that's something that these guys have visibility of, but you do not. You don't have visibility of where current positions are in the market. You don't have visibility of where the stops are in that particular market. You've got no clue at all, but with these indicators you will have, and you can see by using these indicators, you'll see how it's liquidity probe and reversal, and also you'll note that when the herd go one particular way, it then creates a demand, because if they sell it, there has to be someone to take the other side of that exchange. So if you've got 100 million, well, let's probably just say 1 million lots sell, there has to be 1 million lots buy from someone who's got a much larger capital to take that trade. And that's why, that would have been a demand, because the retail guys sold it in a big way, price come up to take their stops. And we have to remember the logic for the reversal is fairly complex, but what it is essentially is that they're bearish, and then they're less bearish over time, and then at that point, less bearish is actually bearish for us, because we have to take a contrarian view on the market. So therefore, they're very heavily bearish, so it's a buy. Less bearish is a sell. So it's about the reduction of volumes over time, and then that's how it works. So the cool thing about the order book is that we have visibility of the SLCs, the stop loss clusters. So you place your stop just above, and then you're targeting the SLC below, and that's it. So it's a really quick one, and the pricing and the plans are here, and you've got a few options to choose, and then you've got a QuasiDB code for a discount as well.